So when I say that the price of Bitcoin will easily, I think without even trying hard, go to $500,000.
Yeah.
With this halving in 3 weeks, it will be more scarce than gold. So it'll be a better, harder currency. And if you were smart enough or fortunate enough or lucky enough to take a small amount of your wealth, didn't even have to be a large amount, just a small amount, and move it out of bolivars into Bitcoin, you saved yourself.
Yusko explains, has historically led to a doubling of Bitcoin's fair value to compensate for the decrease in block rewards. This predictable change in supply attracts significant attention from traders, predominantly male due to inherent behavioral traits. As Bitcoin's price begins to rise, it draws in traders, gamblers, and speculators, creating a feedback loop that pushes the price to new highs. Yusko notes that in previous cycles, this has led to Bitcoin reaching 2.3 times its fair value. However, he anticipates a more conservative peak in this cycle, potentially reaching around $160,000. Yusko envisions Bitcoin reaching the equivalent of gold's monetary value, which he estimates at around $6 trillion. This projection translates to a Bitcoin price of approximately $400,000, potentially reaching $500,000 over the next 5 to 6 years. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
My view on this cycle is fair value today, as you and I are speaking, is in the low 50s. That's a Metcalfe law model that Tim Peterson and others calculate. The halving does this amazing thing. So what the halving does is it changes the fair value. Well, why? Well, because if you think about it, the miners, their costs are fixed. Electricity cost, miner cost. And so when the halving occurs and the block rewards get cut in half, in theory, a whole bunch of miners have to go out of business unless the price rises. So what we've seen in every cycle up to this point is a doubling of the fair value to adjust for the decrease in block rewards. Makes sense. But that movement that's built in, hard-coded in the code from Satoshi himself, that code then attracts attention. And, it's not politically popular, but true. The vast majority of people who are traders happen to be male. Males have genetically, back to our long-distance ancestors, the hunter gene, right? And so if someone were to walk by my door out there, right, I would look. And if it ain't moving, I can't see it. My wife says, get the ketchup. I go to the refrigerator. Honey, there's no ketchup. She walks up, grabs the ketchup. It's not moving. I can't see it. So my point is, once that price starts moving, all the traders, mostly male, pile in. And then the gamblers come in and the speculators and they lever up. And then we get to the overpriced level, usually 2.3 times the fair value. So let's say fair value this cycle, 50. We're going to double. But this time we're not going to double because now we have ordinals. Ordinals allow there to be transaction fees so the miners can get compensated not just from block rewards. So maybe the fair value only goes to 80K. Okay, let's just be conservative, 80. Double, that's 160. We shoot right through 160, but we're not going to go as high this time, I don't think, because there's not as much leverage as the last two cycles, because they clamp down on Binance and FTX. So let's say we only get to 160 this cycle. Okay, then fair value will continue to accrete. The next cycle, we hit gold equivalents. And gold equivalents, which is about 6 trillion. Everybody says 12. No. Half the gold in the world is jewelry and chalices, and that doesn't count. It's the monetary value of gold at central banks and in those big coins that matter. So that's about 6 trillion. 6 trillion divided by, call it, 15 million coins, because there's been some lost or stolen, gives you about a 400K price. And then we blow through that a little bit, and that gets us to the 500K. So I just think that's pretty easy over the next 5-6 years. So when I say that the price of Bitcoin will easily, I think without even trying hard, go to $500,000.
Yeah.
People are like, oh, we're finally back to all-time highs. Well, kind of not actually on inflation adjusted basis, but we're close enough. But there wasn't a bear market in Venezuela. They've been making new all-time highs for years because the bolivar keeps going to zero. And if you were smart enough or fortunate enough or lucky enough to take a small amount of your wealth, it didn't even have to be a large amount, just a small amount, and move it out of bolivars into Bitcoin, you saved yourself. Every empire eventually falls. And the way you protect yourself is by having a store of value, a hard asset. In the past, that was gold. In the future, I believe it will be Bitcoin. Why? Well, Bitcoin is structurally equally hard, meaning it's equally scarce. The amount of gold that's mined every year roughly equals the amount that's lost or stolen or kind of used up. So it's interestingly hard. Bitcoin, as of the last halving, became equally, the stock to flow ratio was roughly the same as gold. With this halving in 3 weeks, it will be more scarce than gold. So it'll be a better, harder currency. All of what I just talked about is normal cycle, right? Normal supply and demand, and what we have historically seen as new adoption. Now, people forget this is not the first time we had a ETF or ETN, right? The last cycle, when we went from 10,000 to 60,000, from November, kind of Thanksgiving, to mid-January, before the famous Elon tweet, that was all because of GBTC. GBTC, which is a trust, right, was going up about $10 billion. And that $10 billion has a multiplier effect. Remember, you led off that I believe this year-ish, more fiat will be converted into Bitcoin than the previous 15 years put together. So over the 15 years, there's somewhere in the mid 200 billions, I don't have the exact number, of fiat that's been converted into Bitcoin. Now, we have a $1.3 trillion market cap, but that isn't 1.3 trillion getting converted, right? Some got converted at pennies on the dollar. Some got converted at 70,000. So that 300 billion number comes from, there's 30 trillion owned by boomers, okay? 30 trillion globally. It's invested at Merrill Lynch and UBS and all these places that had prohibited you from owning MSTR or GBTC or the miners.
Yusko reflects on the impact of financial instruments like the Grayscale Bitcoin Trust GBTC in previous cycles. He attributes part of Bitcoin's meteoric rise from $10,000 to $60,000 in late 2020 to the influence of GBTC, which funneled significant capital into Bitcoin. Yusko predicts that the approval of Bitcoin ETF will have a similar effect, as they provide a more accessible and regulated avenue for institutional and retail investors to gain exposure to Bitcoin. A significant portion of Yusko's analysis focuses on the impending generational wealth transfer from baby boomers to younger generations. He notes that the $30 trillion in assets currently held by boomers is likely to flow into digital assets as it is passed down. Yusko envisions a future where digital wallets and cryptocurrencies become the norm, particularly for Gen Z and subsequent generations. This shift will drive further adoption of Bitcoin and other digital assets, solidifying their role in the financial ecosystem.
And when the ETF was approved, they're like, I can't say that you can't invest in Uncle Larry. I mean, come on.
No, Vanguard did.
Well, Vanguard did, but Vanguard, look, I have friends who run Vanguard, and they made a calculated decision, I think mistaken.
Or error.
that they decided they want to be the one firm that says, I don't care if all you degens leave because you don't have any money. I have all the old people who are afraid of this stuff, and they have all the money right now. So it was a calculated decision. I think it will backfire on them long term, because what's going to happen, all of us, right? I am the second to last year of boomers. My wife's the last year. And boomers are 60 to 85. And we're all going to pass. And when we do, all of that 30 trillion is going to the next generation. And it is not going to stay at UBS and Merrill Lynch and Vanguard. It's going to go into the digital age. And I talk about this all the time. My 1-year-old granddaughter will never have one of these. She will never have a leather wallet. She will never know paper money. She will only have a digital wallet. And so that generation, the Zoomers, as they're called, the Gen A's, they're going to have a totally different experience than the people listening to this right now. And so ultimately, whether the London ETNs add additional demand, yes. So here's what we had. So we have supply and demand, okay? And we have a supply shock, right? Meaning that now we're going to have fewer block rewards. So there's less, new Bitcoin. So P0 and P1, P1 is higher than P0. Well, then we're going to have a demand shock. That's partly the ETFs as they get approved and everybody rolls them out, plus the new ETNs. So now P2 is higher than P1. So there's no question this cycle could happen faster than previous. I said the other day that I think this Thanksgiving can be the best Thanksgiving ever, right? We're all going to be welcomed back. Everybody's going to love us again. And I think the price would be well into 6 digits. And look, is it possible that it goes really crazy because the supply-demand imbalance is really big? Sure. Because here's the problem. 7,300 Bitcoin needed to buy every day today, on average. Only 900 being created. Okay, that's a problem. So that means someone else, listening here or somebody else has to sell, right? Well, I know I'm not selling mine. I know Pomp's not selling his and you're not selling yours. So who's selling? Well, we found out the other day there was, a wallet from 2010, hadn't traded in 14 years. We sold 1,000. Not a lot, but 1,000. And everyone says, I'll never sell. Here's the thing. There's a price at which you'll sell some. Because here's the thing. The way the average person should think of Bitcoin is as their savings. So when do you spend your savings? When you need it.
Yusko elaborates on the supply and demand dynamics at play in the Bitcoin market. He points out that the daily demand for Bitcoin far exceeds the new supply being generated, creating a persistent supply shock. This imbalance is further exacerbated by the increasing demand from ETF and other financial products. Yusko suggests that this supply-demand mismatch could lead to rapid price appreciation, particularly if adoption accelerates as he anticipates. Mark Yusko's analysis provides a comprehensive and forward-looking view of Bitcoin's potential trajectory. By examining historical cycles, technological advancements, and macroeconomic trends, he presents a compelling case for Bitcoin's continued growth. Yusko's insights underscore the importance of understanding the underlying factors driving Bitcoin's value, from minor economics to generational shifts in wealth. As the financial landscape evolves, Bitcoin stands poised to play a pivotal role, offering a digital alternative to traditional stores of value like gold, with a potential price target of $500,000 within the next decade. Yusko's forecast highlights the transformative potential of Bitcoin in the global financial system. Please like and subscribe my channel.